Welcome back to the Flex Free Game channel. Glad to see you here again. So if you're new to the channel, this channel is really dedicated to working professionals, just giving you some free game, really showing you some things that can help you out in terms of staying ahead of the market, understand what's going on, understand what's coming your way. And really, whether you're in a 9 to 5 or managing your side hustle and trying to grow that, it really just going to give you everything you need to build some confidence so you can make some better trades and really start to see some success in the market. So before we jump into our topic today, if you haven't already, make sure you hit that like button. Also hit that subscribe button. Also, if you want to take or tap that notifications bell, you'll know whenever we come out with some new information, and we'll go ahead and jump right in. All right, so let's go ahead and dive into what's been going on lately in the latest developments in the stock market. So we're going to explore some recent trends. We're going to identify some key catalysts that are impacting the market, discuss some strategies that are really tailored for working professionals, and highlight some upcoming events that may impact your investments and things that are going on within your portfolio. So as you know, April has been a roller coaster. We've seen the markets going, pretty much significantly down since the start of April. But the last few days, actually the last 3 days, today being the third day in a row, we've seen a little bit of a rebound within the markets. Yesterday, the S&P climbed 1.7%, and the Dow Jones actually rose 1.1%. So we also saw the NASDAQ hit 2.5%. And this uptick was something that followed President Trump's softening stance on the trade issues and reassurance regarding the Federal Reserve. So you heard Trump was saying, he couldn't wait to get rid of Jerome Powell, the Fed chair, and talked about actually firing him. And we saw the market really take, a downward turn when that news came out. And then he kind of softened his stance. He kind of turned around and said that, he's not looking to fire him, and kind of made some reassurances. And that gave some investors some ease or ease on their concerns of things that were going on in the market. It actually did contribute to a little bit of market optimism, right? So whenever there's uncertainty in the market, things are looking negative. We do see a downturn. There's been a lot going on with tariffs, and when Trump came out and made some additional comments about the Fed chair, I think that just spooked the market a little bit more, and we saw that impacted, and vice versa. When we saw Trump come out and kind of soften his stance, same thing with some of the tariffs he talked about maybe softening. We've seen the bounce back and rebound in the market. So things to pay attention to. Now, despite the recent gains in the market, the direction really remains uncertain, right? So there's still some things out there that we got to look at that could be, impacting the market or could continue to drive the market down in the short-term future. So we're looking at trade policies, right? So there's ongoing tensions, particularly with China, that's going to continue to create volatility. While there has been talks of reducing tariffs, there's no concrete agreements that have been reached. So that's something we want to make sure we pay attention to, stay on top of those trade policies, what's going on with tariffs, what does Trump decide to do, with these tariffs. So second thing is the Federal Reserve action. So the Fed has upcoming policy decisions. He's been under scrutiny. I've heard Trump say many times that he's too slow to acting and too slow with, changing interest rates and things like that. So we want to take a quick look at that as well, make sure that we're staying on top of it. And later on the call, I'll go over dates of when the Fed is going to come out and give their next update. And then the last thing I want to talk about is economic indicators. So we got some upcoming data releases about the CPI reports and different things that are going to, give us some information on what's going on in the market and kind of give us some insights on how things are going on in the economy. So we want to make sure we're taking a look at that as well. So for working professionals, there's some things that, you can go ahead and take a look at and really kind of, think about what you can do to navigate these turbulent times. And here are some strategies that you may want to think about. So we talk about this all the time: diversifying your portfolio, spreading your investments across various sectors, Now, that is a big thing, right? And I do agree with that, but I'd like to take that a step further, right? Diversifying your portfolio is great, but if you're just picking random companies in different sectors, that really isn't going to achieve what you want in terms of getting your portfolio to grow, right? So no matter what you're investing in, you want to make sure that you're looking at the fundamentals, right? You want to make sure that the top line revenue is continuing to grow. We also want to look at companies that have been able to kind of stay unscathed through these crazy times, right? So there are some companies out there that have continued to move forward, kind of stay above those indicators. We like to use the moving averages of 50-day, 100-day, 200-day. But when things are trading above that 50-day moving average, that usually means that they're in favor. And there have been some companies that have been able to do that. So make sure you're looking not only just to diversify, but understanding the companies that are continuing to do well through these turbulent times. There's been some companies that are still giving great guidance in terms of forecasting. They still think they're going to be able to bring in, additional revenue and raise that top line, which is very important. So you want to make sure you're looking at that too. But also just kind of looking at different sectors so you don't have all your money in one place, and that will help you out. So that's one thing we can do. The second thing is to focus on your long-term goals, right? And I talk to people about this all the time in the market. A lot of people see the market as a casino, right? They're coming into the market, they're gonna throw everything on black, they're gonna get rich, they're gonna walk away happy, right? And that's usually not how it works. Now, I have seen some people get lucky, but for the most part, you got to have a long-term mindset when it comes to this, right? So even if your account looks ugly, right, and you may be invested in some great companies that are looking bad because of external factors, right? A company's top line revenue and a company, being a leader in their industry and still dropping because of external factors is not something that I would, make an impulsive decision on, right? So you still want to make sure we're taking a look at what's going on with the company before making any rash decisions. Don't go selling everything because you had a little bit of a dip. And also, if you still believe in the company and you still believe in it long term, there may be some buying opportunities, right? So I don't like to buy things that, when they're still heading in a downward direction. I do like to see a little bit of a bump, and I do like to see them cross, some of those indicators I talked about before. So when I see some of the companies I really like kind of getting towards crossing that 200-day moving average again, that may be a buying opportunity where I look to scoop up some more shares, add to my position. So keep that in mind. Remember to focus on the long term. Next thing is regular contributions, right? So when the market is ugly, I know people look for other things and they're like, hey, I want to, maybe put some money somewhere else instead of in the market, which I don't have a problem with. But if you are going to be investing in the market, you want to continue to add to your contributions, want to continue to add money there so you can continue to grow. And there's nothing wrong with having cash on the sideline when those opportunities arise. So keep contributing to your account, keep building it, and there will be some opportunities, I think, in the near future to start building your positions. Now, another thing is stay informed. So stay in tune with our channel here. We're going to keep you informed, but also pay attention to the news, right? Like I said, there's some key things coming up in terms of reports. Some things that are going to be coming out where they're going to be, going over what's happening with the CPI report. We're going to be going over what's happening with jobs, what's happening in the economy overall. So stay in tune with that, and also stay in tune with what's going on with these tariffs and some of the other things with the Fed chair. So those are going to be things that will help you make decisions. And then lastly, if you can, consult professionals, right? There's a lot of people that are professionals or people that are experts in this area. Again, I think our channel is a great place to go to look for ideas. So make sure you're getting some insights and some information that can help you with making decisions. So to jump into some of those upcoming events that may be impacting the market, the first one I want to talk about is on May 2nd. That's when we're going to have the payroll reports come out. So that'll be something that we can take a look at, kind of analyze that, see what that means, help us with making decisions. The next thing is going to be on May 7th, where we get the Federal Reserve policy meeting. So again, Jerome Powell come out and kind of give his policies, what we're going to be looking at in terms of interest rates moving forward. And this one's going to be one that I'm pretty interested in seeing, right? So we've heard some different things about how tariffs can impact the market, if that's going to boost inflation. So I want to see what the Fed thinks about that and what they're planning to do with interest rates and how that could impact us. May 13th is going to be that Consumer Price Index report, or the CPI report that I talked about. So we want to see how prices are moving, kind of, again, taking a look at inflation. So pay attention to that. The 30th, we're going to get the CPC, or I'm sorry, the PCE, the personal consumption expenditures report. So that's going to give us a little bit about more personal spending. That really gives us a sentiment, right? Are people feeling like they should be out there spending money, or are they kind of, holding their money a little bit closer to the vest? In recent history, Americans have continued to spend no matter what happens. But if we continue to see things going on where there's uncertainty, we may see a change in that. And then the last one on July 9th is the end of President Trump's 90-day tariff pause. So we could be seeing some new policies start at that time. So you definitely want to pay attention to that, because as of right now, the tariffs have been the main thing driving the market, right? So we want to pay attention to that. If there's some things that come out that may kind of ease tension on what's going on, or give more of a positive mindset or outlook on the market, we could see some jumps. Or the opposite, if he decides to do something more stringent, raise tariffs on certain countries or all countries, that could be something that has a total opposite effect, give a negative kind of outlook on the market, and we can see things dropping like they were before. So all things to keep an eye on. Again, those are some key dates, so you want to take a look at that. And then in summary, while the market is been showing resilience, and again, we've seen a nice little bounce back over these last 3 days, we want to stay informed. We want to make sure that we're using sound investment principles in terms of what we're doing with our account. There are some things that happen in the market that can make it challenging, but if you continue to make sure that you're doing the right things, you're keeping that long-term mindset, you're only implementing trades that are sound. And two that I really, really like right now are cover calls. So if you are holding shares, you can continue to take in cash just by selling cover calls against the shares you already own. If you're down, that's a great way to hedge. If you're not down, it's a great way to kind of continue to bring in income. So that's one thing you can do. So cover calls. If you don't know about those, definitely let us know. We can help out with that. Put a comment down there, and we'll get back to you. And then lastly, bear call spreads. So I love bear call spreads in downward markets because it is a lot less risky. You don't have to put up as much capital to open a position, but you can still generate income that way. So the nice thing about cover calls and bear call spreads is two ways that are very low risk that can help you with continuing to generate income, so that you have some cash on hand that allows you to make decisions when those opportunities arise. So that's going to wrap it up for today. If you like what you heard, again, please click that like button, hit that subscribe button so you can see our upcoming videos. And then also, in our description below, there is going to be a link where you can sign up for one of our case studies. So you can go ahead and take a look at that, give you some more information on some things you can do. Until next time, we'll see you again. Have a good one.